What is up, my friends? We are here on another episode of Level After Next podcast, where every week we're going to be your accountability. We're going to give you the inspiration. We're going to hopefully make you laugh a little bit. And at the end, you're going to have every desire to go forth and slay. So let's do this. Okay, Whitney, I am so thrilled that you're here. I kind of feel like anytime that I have a guest where it's like we have to go back and forth, we end up with like the most brilliant podcast ever. So, I'm so excited. And so to fill everyone in, Whitney Elkins-Hutten, am I saying that correctly?
Yeah.
Whitney Elkins-Hutten is, among many other things, an investor in real estate, huge real estate investments, super successful, director of investor education with passiveinvesting.com. You are the author of Resilient Women in Life and Business. And I feel like we could probably take people through like a whole series of podcasts on your book. Bestseller, so amazing. And you also host the Passive Investing Made Simple YouTube show. Is that correct?
Yeah. And I actually have a new book. So I was co-author on the Resilient Women in Life and Business. And I have a new book coming out with bigger pockets called Money for Tomorrow.
Oh, that is amazing. Okay, I have a lot of questions. I like writing a book is probably one of my biggest projects that life projects, right?
Yeah.
Hoping that after the first one gets busted out that I'll get the swing of things. But I have so many questions regarding passive investment. I think that it's just so smart, but I will tell you that the only time I've tried passive investing has been in cryptocurrency, and I was taken for a ride worth $15,000. So I need your education. I know everyone else is very interested in this. And, you know, I'm just going to take you into the very first question of, can anyone actually be a part of passive investing?
Yeah. So yes, and so when you invest passively, so, you know, people are listening here and they're like, wow, I have my own active investments. I have a rental or a few rentals, you know, small portfolio. And they feel that they want to transition into passive investing. You have to make an extremely different mind shift, right? Because when you're investing in your own assets, right, you're looking at it going, what kind of return am I going to get? Why is that? It's because you're the operator, right? So you're the one that's in control. Whether you like it or not, you're the CEO, you're COO, and sometimes you're the day-to-day operating manager of that asset. You're wearing multiple hats. But when you start making that journey into passive investing, and, you know, my background's mostly in real estate and small businesses, you have to think very differently. So I have to look at it from a lens of not what kind of returns am I going to get? I mean, that's an important question, but that is not the most important question. It's all about the who. What operator, right? If I'm going to be the CEO of running my portfolio, I now need a COO, a great operator that's going to be able to research the asset class, research the market, find the deals, execute on the deals, manage the deals, and then dispose of the deals for me, and then handle all the day-to-day operations. That's the shift in mindset. So where most investors get hung up and they have these questions like you have going like, man, is this really for me? Can I really do passive investing? Is that they probably didn't think of that they are like, wow, I'm not just trying to find an investment that has amazing returns. I need to find an operator that is amazing at finding and managing assets. You know, essentially bet on the jockey, not the horse. And then I'm getting into, okay, does their investment strategy align with my goals for my portfolio? What do I need? Do they align with my risk that I need, that I want to take? Do they align with my timeline of investing? And if all those things point to yes, like you shake your little 8-ball and it says yes, then now you've got your COO, and you're probably going to have multiple operators you invest with. And now you can start looking at the deals. But most people go into this going, you know, how many times have you talked to a friend? They're like, I've got this hot deal like in like Atlanta. You're like, sweet, I want to jump in on that. No, it's totally wrong mindset. Because as a passive investor, you only get to control 3 things: who you invest with, where you invest in the deal, and you have to go into it in that order and with that mindset.
So with passiveinvesting.com, as the director of investor education, do you run the investments, or is this simply an educational space?
Yeah. So with passiveinvesting.com has a portfolio of assets. We have 1.4 billion assets under management. We do multifamily, self-storage, express car washes, preferred equity, and then real estate debt. So we are providing the asset to the investor. But my role here is to help the investor meet them where they're at, help them understand what this vast world of private equity real estate really is and how it aligns to their goals, risk, and timeline in their portfolio from an education standpoint, not as a financial advisor, but from an education standpoint, because an educated investor is, going to be a much better investor and more happier, honestly, with their investment and with the products that we offer.
Okay, so let's take this back a little bit.
Yeah.
Fill us in. How did you get started? How did this become your life's work? And, I would love to know how this came about.
Completely by accident. I'd like to say that I went to school, like Harvard Business School, and I've got all the accolades behind me. I have the School of Hard Knocks behind me, quite honestly. I started off in 2002, purchased a house with a significant other. And a month later, they were the ones doing all the rehab, supposedly. I was the one bringing the capital. It was a partnership. And a month later, the relationship dissolved. And here I had a house, right? Everything was under my name, the bills, the mortgage, everything. And I'm like, oh my gosh, like I didn't see this as an asset. I saw it as a liability. I'm like, this thing's going to sink me. But I couldn't sell it as is. I mean, the house was half torn apart, had psychedelic daisies painted on the walls and green shag carpet and total disaster. I was like, oh man, I got to complete this rehab. So YouTube didn't exist back then. So I got a book from Home Depot and taught myself how to do a bunch of things that I probably maybe should or should not have been doing. And I paid my friends in beer and sushi and pizza. And 11 months later, sold this house for a significant profit. And that's when it dawned on me. I'm like, wait a second. I also had roommates too that didn't mind living in construction zone. I'm like, wait a second. I just eliminated my housing expense and generated, for a whole year, and then it generated a $52,000 profit. I'm like, how many more times can I do this? Like, that's awesome. Not every project went as swimmingly well as that one. And so, but did, several more projects on my own, and then, met my husband, and we did a couple projects together. Got really good at building up equity, but really bad at creating cash flow, because it's the cash flow that gets you financially free. It's not the equity build. And so we had to, really pivot and learn how to start keeping some of these projects that we were, doing and keep them in our portfolio and get them to cash flow. And we built up a portfolio of over 30 single family rental homes, still doing fix and flipping on the side. And then we hit our next ceiling of achievement. We had our baby girl, and I was also taking care of family members. We're both still working full time. And I'm like, okay, we need to go bigger, faster. Because when he decided he wanted to jump in on financial independence with me, I was like, I'm doing 36 family homes on my own. I can't do 84. That's what we're going to need. I'm like, that's just going to kill me. And I'm like, okay, so we need to do bigger. We need to go in on multifamily projects. We need to go in on partnerships. We need to treat this as it's a real business, not just as a hobby. And when we made that decision to transition this to as a real true business, and quite frankly, I stepped away from my day job to kind of burn the boats and go all in on this. That's really when things started exploding for us. We became a general partner on several multifamily buildings, but in the end, it's taking all that cash flow and equity and reinvesting it back into passive assets. That's what got us financially free. is that learning to invest in other people's businesses, quite frankly, to generate that cash flow and that equity growth and tax benefits. So we could go do what lit us up in the world, traveling, spending time with family and friends. And quite honestly, for me, like stepping into, my power, which I never thought my voice was powerful, guys. I'm the one that like got a straight C in public speaking.
I love that. I mean, that's what the show's about.
Right. And so, what I did discover along the way is a lot of people resonated with my journey and resonated that I didn't come from some high affluent background like this. I'm just a regular person who scaled a portfolio like this and really want to show other people that they can do the same.
I love that. And I do, yeah, it's like, I'm not a hedge fund where my parents just bought me a house and I get to make money off of things. And so I mean, that's super inspiring and I think should give people a lot of hope. I have a question on like a little bit of the details. So when you say that it's about cash flow, are you referring to investing in, things where people are actively renting? I know that you have some car washes, storage units. I've heard storage units are a great place for investing. So you mean where you're investing in that, are you part owner or are you like the full owner of that and then being able to earn off of the business itself?
Yeah, some of the assets I'm full owner on, and so we pocket above all of our expenses, all the cash flow. Some of the business, the investments, I'm in partnership with other people, and of course, we have to divide that cash flow and that equity growth amongst partners. And some of those investments, I'm actually the limited partner, where I've invested in somebody else's business. Now, as far as cash flow, the reason why I focus a lot on cash flow. And I talk to so many investors that are like, I don't need the cash flow. I have an amazing job. I'm a high tech earner. I'm a lawyer. I'm a CPA. Like, I don't need the cash flow. Like, I need the equity growth. I really challenge that because for a variety of reasons, but having an asset that cash flows, especially in today's market, we're recording this in December 2023, guys. There's a lot of cap rate compression. Cash flow can be very challenging to find across the board, multifamily self-storage, even express car washes. But cash flow indicates an element of stability for that asset that it's performing in today's market. You have room to adjust and respond to the environment. Also, cash keeps allows you to keep the asset during challenging times. Banks are not taking back assets that cash flow. They're taking back assets that are not cash flowing well, right? Or at all. And so when we talk about wealth pillars, one thing that I coach all of my investors on, all my mentees in my mentoring program is you have to adhere to the 7 pillars of wealth. Look for assets like, that preserve capital, create cash flow, create equity growth, and leverage tax benefits. Okay. And those are 4 pillars. Those are 4 of the 7 pillars. But even if you just focused on those 4 pillars, you're going to be so much further ahead than most investors that are swinging for the fences on momentum investments.
So when you have invested in a business that does have that cash flow, and yeah, I agree with you. I don't know, like anybody who says they don't need cash flow right now, I'm pretty sure it's just Elon Musk, maybe. He's still looking for cash flow though, right?
Yes.
So is there like a difference tax-wise with when you are invested in a company or owning a business that does have that cash flow? Because I would imagine, are there more write-offs in a business like that? Do you have more, I don't know, flexibility?
Oh, potentially, right? So if you're investing, say like you're doing a fix and flipping project, you're buying a house, you're just fixing it up, and within a year, you're going to sell the house for an equity profit. That asset is treated differently from a tax perspective than if you had a rental specifically targeted to hold it as cash flow, even if you had to sell it in, say, less than 12 months. That is different. Those are different tax treatments. Where most of the tax advantage comes in is you utilize depreciation, which is it's a allowable expense by the IRS. So we're kind of getting in the weeds a little bit, but entertain me for a minute. One of the most powerful things of real estate is that the IRS realizes that this multifamily building is going to break down over a period of time. So for multifamily, they say, okay, the useful life of this building is 27 and a half years. Don't ask me how the IRS figured that out. I don't know, but that is their rule. And they say, Mr. Investor, we do not want to maintain that asset. Okay, we want you to do it because you're solving the problem of housing for people. So we're going to allow you to break up the cost of the building, not the land, but the building over 27 and a half years. And you're going to be able to take this phantom paper write-off deduction on your taxes. Okay. Now, for some people, just that straight line depreciation can offset a lot of the income on their property. Where it gets really interesting for us in the larger institutional assets, and you can do this with single family properties, it's a little more costly to do it there. But for a multifamily building, I go take advantage of what we call accelerated depreciation. Okay. So this is where I hire an engineer. They go in, they break apart all the different parts of the building. If you guys are looking on video, they would, windows break down different than the walls, that breaks down different than the fan above my head, and it breaks down differently than the sliding door behind me. Okay. All those get broken out. And anything that is depreciated in 20 years or less can be accelerated to the first 5 years of the project. Okay. And then we have other things right now in 2023 and 2024, bonus depreciation. That's not an accounting methodology. That's an incentive. But the cool thing is as a real estate investor, when I accelerate that forward, it's the same depreciation, but instead of taking it over 27 and a half years, I now get to accelerate a nice chunk of that forward. I can use, again, those losses to offset income, not only within the income that particular asset is producing, but if I have other passive assets in my portfolio, it can offset that. And if I have other passive gains in depreciation recapture in my portfolio, it can offset that. So really what depreciation allows an investor to do is to realize time value of money. We're accelerating, we're creating velocity in the person's portfolio.
You are very good at helping this make sense to somebody who does not understand it at all. So, no, I love that. Thank you. And so I guess when it comes to most of the people in my world in the last 5 years or 10 years, I suppose, it seems like for a long time, the hope was to build or buy and flip for the purposes of like a VRBO or Airbnb. And it feels to me as though, some of that has become less exciting, or I would imagine in today's economy, I don't know very many of us that are like looking to go spend $1,000 for 2 days anymore. But where do you feel that falls as far as it's not, I wouldn't imagine it's exactly passive investing. It seems like a lot of work. Especially like I have a neighbor they have a couple of VRBOs, and some of the text messages they get from tenants are just insane. There's a spider on the front porch in the woods, but does that fall into this? And is it even a space where you feel is the smartest place to begin investing?
Ooh, I think a classic real estate answer, it all depends, right? And I quite honestly, right before this podcast, I was in the middle of a heated email exchange that's been going on for 2 months with Airbnb on something. Like we have, some short-term rentals in our portfolio. So I feel your pain. I feel everybody's pain here, as a host as well. Now, so where I take people is, especially if I'm coaching them one-on-one, at Ash Wealth, is that, I talk to them about like, what do you want? Why do you want it? Who do you have to become to get it? Those are the three main, quick questions. We go through a much deeper process, but in that process, we really evaluate in that, what do you want? What are you doing? What do you need for your portfolio to kick off 10 years from now, 5 years from now, 3 years from now, 1 year from now? And how do you want to use your time? Because the activities that you need to do now to get you on track for 10, 5, 3 years may put you in a spot where you need to build a quick cash flow right now, short-term rentals. If you have a knack for that, if you have a high skill for customer service, or you can hire those people into your world, yeah, that can be a very lucrative strategy. Okay. But over the long haul, if you're just like, I want to ride off into the sunset and don't call me, I'll call you, maybe not having short-term rentals in your portfolio, right? For me, the reason why I have short-term rentals in my portfolio is because I wanted lifestyle assets. I wanted to have the ability to bounce around to these different locations and have a home that was mine, so we could spend time in there. We could build memories in there as a family, but I could make money when we weren't there. Now that, having short-term rentals, you asked me, should somebody start there? If that's where they need to start, then yes, but we would have a much longer conversation as far as what their goals were and how they want to utilize their time, and what kind of capital investment you have, what kind of time investment are you willing to make, what kind of skills do you have, and is this really the best choice for you? Overall, as far as the Airbnb market, I think in a lot of areas, it got completely overheated. And we're seeing Airbnb soften quite a bit. I think COVID really was I think we're resetting. I think COVID just really pushed that industry, just off the charts. And there was a lot of exuberant growth there. And now we're going to reset back down to where the industry probably would have been without COVID in the mix.
Yeah, I completely agree. And I'm interested. I can't say excited. I'm interested to see where we end up. Mm-hmm. I have a phone going off right now. So I love, okay. First, I want to agree. I feel like I have a lot of friends who, we were all rich in 2020, right? Like just throwing money out the window is so exciting. And I have a lot of friends who decided to invest in that, whether in building or otherwise. We have kind of an interesting situation where I'm at right now, in that we had a huge fire burn down our neighboring town. And so that created a real estate boom inside of a real estate boom, Mm-hmm. And so it's been interesting to watch this town shift along with kind of everything that's going on around it. But they can't do what they could have done in 2020. So a lot of these things are falling apart. They're having to be sold. The construction can't be completed. So, that's clearly a risk. But how much do you need to pay attention to kind of the climate, and is there a way, or are there people who can help kind of forecast those things? Mm-hmm. And could we have seen this coming? And, moving forward, while we're not kind of in that economic boom at all right now, mm-hmm. Should people be looking towards that, have expectations for that, and start to consider the passive income right now, or passive investing right now?
Well, real estate is so regional, right? It's so local, right? So, Airbnb in, an East Coast town versus a West Coast town, they could be, very different. We have, I live in Colorado, and, Airbnb in one Colorado town is suffering, and in one mountain town, it's booming. For me, short-term rentals, I'm constantly looking at the wealth pillars, right? How can I preserve my capital, create cash flow, equity growth, and tax benefits? Also, one of the wealth pillars, one of the 7, is the operations. How can I control operations? It can be, if I'm going to invest in somebody else's business as a passive investor, do I know, love, and trust that operator? Also, can I control I shouldn't say control, but do the local laws and tax structure benefit me? And that is a huge shift that we're seeing with Airbnb, is that a lot of locales are starting to shift how they look at Airbnb. And I know one of the places that I hold property, they're putting in, restrictions. One of the places I hold property, the restrictions have been there for 6 or 7 years. The town's adjusted, things are normalizing. It's running so smooth. Like, we're back to everybody being profitable. Another town, it was total exuberance. When I bought in, it was 200, I think there was about 200, 225 units. We inflated up to 650 units. And now, we're seeing a huge reset between the economics of the town, but also like with the jurisdiction putting in, like, now you have to be licensed. We're seeing a huge sell-off of real estate. I think if you can hold in those locales for like 2 or 3 years, things might normalize again and come back down. Essentially, when the tide goes out, who's swimming naked, right? That's where we're trying to do. There's a huge washout here. In the end, and also, like, why do you hold the short-term rental? Like, is it corporate rental? Is it more of a student rental? Is there like a destination there? Is there a regional destination? Are you like in some place like Maui that is completely dependent on somebody traveling from the mainland to get there? So all those factors are really going to play into like what will work and not work for you over a long period of time. But that is one of the reasons why I really help investors understand you have to have a very secure, your own financial moat has to be extremely secure before you start getting into investing, because you have to be able to weather all these storms. And one of the things that I'm seeing is that a lot of people are very undercapitalized with their reserves. And so they're not prepared to hold an asset 6, 12, 24 months. Because the bank only made them show 3 months of reserves, and that same 3 months of reserves could be shown for all 6 properties they had. But now all 6 properties are challenged. The reserves are gone. So we're seeing a lot of people that have overextended themselves and not have enough reserves in place.
Well, it kind of answers my question of like, can I just send somebody some money? That's what I want to do. I just want to be like, hey, here's some money. I want to invest. Yeah. Like, you deal with everything and just give me my payout in 10 years.
Well, and that's one of the allures of like passive investing. Like what we do here at passiveinvesting.com is that we help pair investors who have a higher and better use of their time, or just want to use their time very differently. And, we help them, one, invest to preserve capital, create cash flow, equity growth, and take advantage of tax benefits from a very balanced approach. Could you go and do this yourself? Absolutely. And you're going to have to become the expert in that asset class, the expert in the market. You're going to have to build all the systems. You're going to have the team in place. Could you do it? Yes. Most people don't have the bandwidth to do it. And that's where we come in.
I love that. And again, this is really a place that I've had a lot of interest. And I agree with you, because a lot of times my husband and I, when we consider the Airbnb, VRBO direction, it's so that we can own something. For me, I just want to be able to decorate it and write everything off. But it's so that we can take the kids and have this space that is ours and have family, but then also earn money off of it. So that makes complete sense. It is scary. And especially when you start future tripping on all the things, the plumbing and the, just everything, the cleaning services and whatnot, the managing of it. But so with passive investing, and when you're working with people, is it would it be their investment and it's just them investing in this, or is it more of like a group investment, or is there both?
Well, it depends. With us, it's a group investment. So we're looking to buy high institutional grade assets, meaning, we'll go buy an $80 million apartment building that has like 252 units on it. And so there's 252 potential streams of income. And, I always wondered, I would drive down the street and I always wondered, like, who owns all these apartment buildings? Like, and it's groups of investors. And so we go buy the building and we'll aggregate investor capital together. We'll put a loan on the property, but all of this are coming together in order to provide the down payment on the property so we can recognize the income and the equity and the tax benefits on that property. And we're backed by hard real estate.
Wow, that is amazing, because it sounds much easier than some of the other things that, again, we kind of get overwhelmed with. So if somebody were to come to you, like, let's say, just getting started, what are you looking at as far as like, what should they consider before, say, taking part in, becoming one of the investors in a project of yours? Like, where would we start? What do we need?
Yeah. So if somebody is interested in passive investing, really the first step is to, educate yourself, and sometimes just jump on the phone with an operator. And, for us, we have our free education. I do a weekly passive investing made simple masterclass. I do a monthly boot camp, which is very skills building. So I help investors understand their goals, risk, and timeline. And then, walk through how to vet operators, markets, and deals and create those systems for themselves. Okay. But part of this process is actually getting on the phone with the operator once you understand your goals, risk, and timeline, even at a very high level, and, having a conversation with them to understand, essentially you're interviewing them. Are they a good COO for your business? Right? The business being your passive portfolio. And so, having that conversation and interviewing them and understanding, one, do you know them? Do you know their business? Do you like them? Right? Okay. And do you trust them? Because they're a partner. You're going to be in partnership with them, for 3, 5, 7 years in business. So those are kind of the first few steps. For anybody whose head's still swimming on this, I actually have a free resource for you at passiveinvestingwithwhitney.com. I have a ebook that walks you through the first 7 steps that you need to take to actually get invested into a deal. And these steps, they don't take long to execute, but there is a certain order that you should execute them in.
I love that. We will put that in the show notes. Everybody go, let's do this. It's time. Yeah. No, that's wonderful. Thank you so much for that. And I mean, honestly, I think that this is kind of a place where anybody who's at that space in life where we're having to think about the investments, having to think about getting our kids through college and then what's going to come after that. I know, I hope to have a retirement that is good enough to not require my kids to take care of me, although they are all planning on becoming millionaires. So there's a little piece of me that is banking on that.
Well, it's also passing along that knowledge, right? You don't have to just pass along the money, but can you pass along the knowledge too? That is super amazing. And that's one thing that I talk about in the Money for Tomorrow book that I have coming out with Bigger Pockets is, if wealth generation is a game, do you understand the objective? Do you know the rules? And then do you know the strategies on how to win the game? And because most people go into it with tactics. I want to invest in Airbnb. That's a tactic, right? Like, can we zoom out a little bit and understand the objective, the rules, and then the strategies? And then we can start matching people with tactics that they know they love, that will fill their heart, and that they can be happy with. But part of that game is understanding how to pass wealth on. And it can be monetary wealth. It can also be knowledge wealth. And so your kids are going to hopefully benefit from both. But even if you decided, I'm going to ride off into the sunset and spend every single dollar, you have all this knowledge built up. Educate them. That's the most important thing that you can pass on.
I love that, and everything, right? But that is so true. And I'm already helping my kids become better at saving than I ever was. So when does Money for Tomorrow, your book, come out, your new book?
Yeah, it drops February 22nd, 2024 with Bigger Pockets. And so actually you can go to I'll get.biggerpockets.com/Whitney, and that will be you can go ahead and drop your name on the list. You'll get notified when the pre-orders open, and there's going to be, I am just chock full of the pre-order launch where all of these like crazy bonuses happen. There's going to be a 4-week masterclass for anybody who pre-orders the book. It's just going to be, we're going to blow the doors off of this thing.
Oh, that sounds amazing. So is kind of my last question, as far as passiveinvesting.com, is this a community? Is it something that you become a part of as you're investing? I know that you do the education. How does that work? Is it like a membership?
Yeah, so you can go to passiveinvestingwithwhitney.com, fill out a quick little form there, and that will get you connected to our Passive Investor Club. And there you get some free goodies. One, you get plugged into our free education that I do with our master classes and boot camps. Next, you get plugged into our deal list. And so if you're looking actively for passive deals in multifamily self-storage, express car washes, and real estate debt, you'll get all those notifications in your inbox as well. And we're the owner or operator on everything. So we're, you're one-stop shop, so to speak.
I love it. I already know, love, and trust you. So no, this is really awesome. I think that, again, it's just that, like, where do you start? You go to Barnes and Noble and you look at like a million different books and you just don't know where to start. And so this has been incredibly helpful and insightful. And we'll have everything from, I love how you're really, with the launch of this book, providing so much more than just the book. And I think anybody who has any kind of inkling that, this is a place that they'd like to go in the future, are looking right now, that sounds just really phenomenal. And I can't tell you enough how beautifully you've been able to kind of navigate all of my different questions and make something make sense it's been scary for me to really look into. And the assets that you're providing are so expansive. So thank you. This is really amazing. I'm sure that upon reviewing this, I'm going to have to ask you a million more questions. So whether we have you back on the show or we meet up in a braid or on YouTube, I would love that. Everybody, check out her YouTube channel for sure. Go look at passiveinvesting.com. Check out the book. I'm going to put all the links in the show notes so that it's very clear and can help everyone kind of go learn about this. And I love the thought of, pass it down to our kids. Just because we don't make something happen doesn't mean that we can't teach them how to, right? But I think that, again, this is something that we've considered for a long time, and probably understanding it is the first space to go.
Yeah, a confused mind doesn't invest. And so, really that's what I aim to do, is help people understand that, it's a group of people going and buying a building together. That's really what we're doing. That's it. And everybody.
Do you have people invest at different levels?
It depends on the actual investment. Some people come in at the minimum investment. Some people will come in, at $1 million or $2 million investment, or more. We work with retail investors, and so we allow for that range to happen for sure.
So cool. So amazing. I love your story. It gives hope to so many who, it's just kind of a pipe dream. I appreciate you coming on so much and letting me share you with my people. I know that they're going to love this, and I just can't thank you enough. It's been such a pleasure to get to speak with you and, like I said, share all your knowledge.
Absolutely. My pleasure.
All right, there it is there. Thank you so much for joining us today on Level After Next podcast. Go ahead and subscribe so you don't miss anything. Or if you really don't want to have any FOMO, head over to levelafternext.org where you can catch up with all the things. Peace out.